to the third edition of the State of the FinTech Union, the Fireside Chat series. Today's topic is neobanks. Quick recap. So we started off back in July with a survey of top 100 FinTech founders and CXOs. And we had a couple of fireside chats last week, starting off with payments with founders of PhonePe, Razorpay, and the Chief Digital Officer of ICICI Bank. On 20th August last week, we did a fireside chat on lending, where we had the founders of Zest Money, of Business, Vivriddhi Capital, and the Chief Digital Officer of HDFC Bank. Today, we have a great panel lined up today. Both the survey and the insights from these chats will go into the final report, which will be releasing early September. The details of which will be released closer to date. Quickly setting up the format of today's discussion. So I will do a quick introductions, followed by Shwetang from the McKinsey team taking us through the key insights from the survey, specifically what we learned on the neobank side. Then we'll deep dive into the panel discussion, which Vikram from the Matrix team will be moderating. We'll have the last few minutes for the audience Q&A. So please keep putting your questions in the Q&A box, and we'll either answer it live or take it up in the last part of the discussion. Quickly introducing today's panel, we have Sameer Shetty. Sameer heads digital banking at Axis Bank. Before this, he spent 12 years at McKinsey. We have Vinay Bagri. Vinay is the CEO and co-founder of Neo. It's a neobank. Vinay was previously leading the employee and corporate salaries and employee banking at both Standard Chartered and Kotak. We have Anurag Sinha. He's the co-founder and CEO of OneCard. It's a new age credit card focused on the mobile generation. Before this, Anurag was the co-founder at Walnut, a personal finance management app. And before that, spent over a decade at ICICI Bank. We also have Jiten Gupta. Jiten is the is the founder and CEO of Jupiter. It's a digital bank focused on millennials, launching soon. Jiten previously was leading PayU in India, and before that was the co-founder of CitrusPay. Lastly, we have Malcolm from McKinsey. Malcolm is a partner at McKinsey and been with the firm for over 12 years. He works with banks, fintechs, and NBFCs on all things digital and analytics. The session will be moderated by Vikram Adyanathan. Vikram is a partner at McKinsey at Matrix Partners, and he leads the financial services practice here. Works closely with a bunch of companies, including Off Business, Five Star, Ola Financial Services, and Ziploan. Over to Shwetang to take us through the survey findings.
Good evening, everybody, and welcome. I'm going to just breeze through a few set of slides to take you through what are some of the facts that we've tried to get from a bunch of founders. As Sarthak mentioned, we did this survey with about 100 or so fintech companies. If we move on, the survey is meant to be just one dimension to what will hopefully prove to be a very rich discussion on the new banking space. We covered about 4 areas in the survey. The first one was basically how has the pandemic actually impacted ongoing plans of neobanks in the country. I think as we can see from the survey, almost everybody is impacted, but about 50% of them have reported that they are going to delay their product launches by at least 3 months. So if anything, it's in timelines. When you look at the bottom of the chart, we see that volumes are almost back to where they were, at least for the players who were active before the pandemic struck. And what we also are seeing now is that there is a decrease in customer acquisition costs that some of the banks have experienced. So that's great news overall, not as badly impacted as some of the other segments. However, all of these players have taken a number of measures to tighten the noose on cost. So we see that there's about 15% reduction on average, which is made on the fixed cost. And obviously, people have gone slower on their marketing budgets, generally a 30% reduction that has been reported. However, on this chart, there are about 50% of the people who have completely brought this to a standstill. So I think it'll be one of the interesting discussions to actually look at how do they think about the recovery happening and doing active marketing going forward. Third part of the focus survey actually was a bit of a forecast. We asked all these founders, where do you think, when will recovery be back? And I think we've landed better than what the founders said. So based on this, the founders at least tell us that about 80% of the people think that the recovery is about 3 to 6 months, maybe even more outside. But we also have some data which says in the previous charts that we are already at the pre-COVID levels. So net maybe we are doing better than what the prognosis was. Uh, However, there is obviously a funding squeeze that is being experienced across the board. I think it's safe to say that people will find it somewhat harder to raise debt on the market for any expansion plans, or even if some of the neobanks have lending plans. Finally, if we come to the last page, which talks a bit about what's the outlook going forward, I think, and especially in terms of collaboration and partnership with banks, I think this is one of the most overwhelmingly positive outcomes of this survey. That there seems to be great optimism in terms of the partnerships that banks and fintechs can actually establish, which is great overall for the ecosystem. I'm sure that's the theme that will be discussed. And the other optimistic part is, which is that across all the metrics, there's an optimistic, whether it's flat commissions or gross margins or even customer acquisition costs. Players actually see that the economics of neobanks as an outcome of this pandemic might end up being better. It'd be good to tease the details on what they think are the core drivers that will bring this. So that was just in brief what the results from the quantitative survey are. But now we come to the fun part. I'm going to hand over to Vikram to actually get us started on the discussion.
Hey guys, thanks so much for joining us. We've got a pretty overwhelming response in terms of attendance to these webinars, so which is pretty humbling, and we're hoping we can stay true to some of the expectations and meet the expectations in this webinar. So we promise of hopefully no holds barred, freewheeling chat. I want to start with sort of the overall confidence index that we've been trying to put together across segments. Obviously, COVID's been a dampener to the momentum in the fintech space, but it's also been a long-term accelerant. I want to start with sort of the neobankers on the panel, and it's been a slow build for all neobanks because you're building something pretty unique for the first time, and it's hard to build. Has COVID slowed down that slow build even further? And how are you feeling about sort of launch? And I'm going to start with Jiten, who's sort of waiting in the wings for a launch first.
So thanks, Vikram. Thanks for hosting. So I think when I look at the whole journey in terms of this, I would call it digital banking journey rather than neo-banking journey, because I think the term neobank VCs and media guys have introduced. So somehow I'm still sort of getting.
I learned this term from you.
So I'm still understanding this term. But anyway, so I think the whole sector, if you look at it, the digital banking sector, and especially when you're sort of building from scratch, I think it by nature itself it is time consuming, because your backend infrastructure, your risk, compliance processes, all of that you still have to set up, irrespective of how you what offering you try to give to the consumer. And I think it's a real money movement which you're doing. So you can't afford to goof up on anything related to security or processes. So we started this journey, we were very sure from day one that it will take us anywhere from 8 to 10 months before we'll be able to roll out exact offering. That being said, yes, COVID has had some impact in terms of the delivery timelines, and that impact is mainly, the way I see is, I think when you do such kind of partnerships in person, your partner bank, I think you're able to push things faster and more swift. But when you sort of don't meet there is an impact, because these things requires discussions, these things require solutioning, these things require to sort of figure out what is the best way of addressing the customer concerns, security, and all of that. So I think net, I see that is the impact which we are seeing, but I'm not personally bothered by the delay, if you ask me. I know you keep asking me as an investor this question, and when are we launching? But I have enough patience on this side, so I'm not personally bothered because I think the last thing you would want is that you launch it in hurry and then you goof up with customer experience or customers' money in reality. So I think that's the last thing you'd want to go in.
Anurag, Vinay, your products are in the market, and from a consumer standpoint, are you seeing sort of an acceleration towards digital banking where it's become much more of a pull product than it was before?
I think no, definitely, and probably the pandemic has just accelerated that pace because we are kind of avoiding every contact possible we could avoid. So, and other thing is that especially as when you talk about digital products, we all anyway thrive on contactless experience. So I guess it was to that extent we are seeing more pull-based thing rather than pushing. There is no physical touch point anyway. But I would just echo what Jiten was saying, that because especially in these areas, we are looking at much more deeper integration rather than just a distribution partnership with the banks. Naturally, the hurdles we need to cross before we actually launch is many more. And more importantly, also, I would just add one more dimension to it: security. I mean, especially because you are dealing with customer data. And security plays even larger role. So a lot of certification which you need to do takes just time. And pandemic basically does not allow us to engage. And it's easier for us to do remote work in a structured environment, but areas like this which is still unstructured, dialogue works better. But we're walking through it. But we have been pleasantly surprised in the last, I would say, 2 months of launch, and we're seeing a lot of traction of our product. For customers to opting for it and actually, wanting to apply and, go through the entire journey online. So definitely, yes.
Vinay,
I mean, there are two major things which have happened because of the pandemic, we think, which are positive. So one is, banks are more open to do things digitally. Customers are more open to do stuff digitally. So there's never a question of demand, at least for a good digital banking experience now. But just the whole thing has got accelerated because of what has happened over the last few months. So I think it's a great time. It takes some time to figure it out and get it right, because as what Jiten was saying and Anurag is saying, it's a deep integration into core banking of a partner bank. It's not easy. And I have been a banker, I would be really worried to do such an integration in a hurry. So yeah, it will take time for sure. But I think this is probably the best time if there was to make it happen.
Vinay, just very quick comment on, if you look at your conversion funnels and if you had to think about that funnel optimization pre-COVID and post-COVID, does the funnel look better, and how much better?
See, on the product to product, it will be difficult because we did not have the product pre-COVID. So it'll be difficult. So my product, which was live pre-COVID, was travel card. So you can imagine, that's no longer existing. And the product which is live now, which is a savings account, was not there. So I won't be able to answer that question right.
Fair enough. Anurag, any comments on sort of conversion funnel? Does it look better than what you thought?
So I would say, April, May was shock. I think shock for everyone. We had actually didn't know what to do, and consumer were also equally confused. But I think we are seeing much more, I would say, a better conversion than what we expected, because consumer is much more open to do things digitally. We still, regulatorily we are allowed to do video KYC and other things, but some of the features are still getting smoothened out. People don't have the same mobile number in Aadhaar database as they have. We all assume that it will be for everyone. It is not. And then customer is not in CKYC database, which we expect. So, those drop-offs are there. But I would just add that we are, along with banks, we are solving this much faster than what we would have solved probably without COVID. So I think, but yeah, I would say conversion is definitely better than what we would have seen before.
Yeah, and the reason I asked that question is that I'm hoping that there is a real consumer pull, which you're seeing, as well as DIY that is happening, do it yourself that's happening from a consumer perspective, which improves all of our consumer funds, right? Because then that would be a huge positive coming out of from this pandemic. Uh, Samir, I'm coming to you on this one. I know you looked at some of this data, and your first comment was people are more optimistic than I thought. And so, from your vantage point, why do you say that? Why do you think that people are more optimistic? And I know your comment was not specifically neobank oriented, but was more sort of all the fintech ecosystem data that you were looking at. That's one question. And the second, from a bank's perspective, are you much more of a digital bank now that everyone's been sitting at home and operating from home?
Sure. So, firstly, Vikram, thanks for having me on the panel, and thank you everyone for joining as well. So let me go with both. I think my first comment, as you said, was not about neobanks, but about the survey in general. And if you look at the survey in general, it's like 27% of people have a negative outlook even in the short term. To me, that's extremely optimistic actually of what's happening in the economy. But because if you kind of look out there and see there isn't much activity happening, and my comment came from there. And if you look at the worst one as well, even if you take lending, more than half the people are optimistic about the short-term outlook. Which, if you came to the banks and asked them, I'm not sure we are there. We are not kind of going gangbusters on our disbursals and lending and so on and so forth. So my comment was a little bit this is that, and not specific to neobanks. So that's on the first one.
And just sort of double clicking there, Samir, is it because we don't know where this lands and how big the holes are, or it is just a question of sort of activity coming back?
I mean, the two are linked, right? Look, I think number one, I don't think we've all, at least like I haven't fully figured out, and I think it's true for our bank also, that how much of how deep into the hole are we? That story has still to play out, right? Like what's happened to economic activity? When will it come back? Does it come back in the same shape and form or not, etc. is a little bit of a question. So there is that. And for sure, the retail NPA story has not played out. It has not even started to play out. Forget playing out, right? So, and remember that India has gone through 10 years without a retail cycle. And in fact, our risk costs for the last 10 years have just been going in one direction. So it is also timely from that perspective. So nobody knows how this plays out. Maybe it will not. Let's be hopeful. Let's be optimistic as the rest of the people here are. That will all play out well. But I'm not sure that's the only potential outcome. That's kind of where my first comment came from. On the digital and stuff, we are, I think, from a mindset perspective, significantly more digital now than we were, let's say, before COVID. So I'll give you some stats to make this come live, right? And I think it will also, when we started this, said we will beat up the bank. So let me start that activity myself before the rest of the guys start, right? So before COVID, if I remember the facts right, I think there were 34 people in Axis Bank who were allowed to work from home. Yeah, 34 people in Axis Bank who were allowed to work from home, which means that they had VPN access and so on. Of course, you could always work from home if you did not want access to systems, but there was a very, very small number of people who could actually work from home. Today, we have on average on a daily basis 16,000 people logging in on the VPN from home. So that's the shift that COVID has done. Now, what that does on from a mindset perspective is kind of change everybody's mindset significantly towards digital. So that we are seeing happen quite dramatically. I think on the you not ask me this question, but let me answer it still, which is on the conversion funnels and stuff like that. So see, for us, it's actually been quite a polar, and we've been, unlike let's say Anurag or Vinay, who have launched the products now, products live for a while. For us, it's a very polar experience. So if you look at, as an example, the investment products, liabilities, right? Fixed deposits, mutual funds. In COVID times, our volumes went up quite dramatically. They almost went up like almost 20% month on month. In the first quarter, more than 75% of our fixed deposits were originated digitally, fully digitally, direct by customer. About 60 or 65% of our mutual funds were fully digital, originated fully digitally. 65% of our personal loans came fully digitally. So there is a clear shift. These numbers were high, but there is a clear shift in the COVID times. It is likely a combination of both demand and supply, which is, we didn't have kind of people in the ground who could go out and reach out to consumers and sell. So there was that piece as well. Consumers wanting to do it far more digitally. So we are seeing that happen. But as I said, it's a very polar experience. So on some things, there is like a surge. On some other things, it is more linked to activity. And because activity has gone down, the demand itself has gone down. So, we see that as well. The funnels itself haven't changed actually much. So if you look at the conversion numbers in the funnels, they haven't changed much at all, which also, by the way, we should all expect. So that's kind of our experience.
So you're saying higher adoption, but it's not like the final conversion at the end of the funnel changes.
Yeah.
Again, coming back to the digital bankers and neo bankers on the panel, it looks like every bank is going to be more digital than all of us imagined. So why should a neobank exist? And I'm looking at the consumer perspective. If Axis can provide a 10x digital experience and you have 65% adoption on personal loans, 50% adoption on digital fixed deposits, and so on, why is there a space for neobanks?
So I can take a stab, Vikram. So I think the way I look at it is, or rather any business for that matter, is the market size. And if you look at the market size in India, when it comes to banking, it's like you can actually serve 1.3 billion people. Fortunately, with Reliance Jio coming in and all the 4G connections being accelerated now, we have now almost 500 to 600 million digitally native people who are sort of coming online or coming on internet first time, and they're doing everything on their mobile. So I think that is the opportunity I see. Now, when I'll give you one more context and then I'll come to the answer. I think when in 2003, Kotak and other banks started, everybody sort of questioned that this is like a 61st bank. Like, is there any scope for a new bank in India? And today, fast forward 15 years, if you look at it, I think all of us know the story. So from market, the beauty of India market is that the opportunity is so large that even 10 more banks come in India, I think all of them will do well, provided they don't screw up. So I think that is how I see the market opportunity. Now, coming specifically to like the experience of digital banking, I think the experience of digital banking, in my view, is not about just solving the onboarding or just taking the process digital. I think that is, in my view, is a short-term approach which is needed. But that being said, a consumer is looking for a very different experience. And I'm talking about the digitally native people who are sort of now used to buying from Amazon or Flipkart, ordering from Swiggy, Zomato, taking cabs. They are now seeing the experience of like search, recommendations, reviews, ratings, all of those kind of stuff. And none of that exists in banking world today, unfortunately. So I think digitalization will happen by banks or by non-banks for that matter. But who can provide the experience which is more personalized, more contextual, more service-oriented towards the customer? I think that would be the key. And I'm not saying it's a competition. I think it will be working together. And there will be set of people who would be savvy in banking. They would look for a better experience. So in my view, those guys would move to this new age experience of more personalized and contextual. Then there will be people who have never experienced digital. In my view, those guys will move to digital experience. And I think that's how the improvement in the overall adoption curve will happen. So it is not one versus another. It is like both sides will do job which is required by the market.
I like to, Vikram, just like to add to that point.
Vinay.
In our case, I can give some examples of why there's a chance to create something better in partnership with banks. So let us take a simple example of our global card. Very simple product. You just load money in INR, travel anywhere in the world at zero forex markup or whatever. Now we've had travel cards in the industry for multiple years, but it was only till last year that our product came out, and it's a very simple product from a product perspective. Any bank can do it, but as Jiten was saying, the whole idea is about experience. It's about being on WhatsApp 24/7 when you are abroad, or showing you a transparent currency calculator or an ATM locator, or telling you which ATM which is free around here. So anybody who's used global card, now we've got 100,000 users who use global cards. I've been a banker. I've never seen an NPS of any product in my banking life which was 81 or in that range. So you can understand that if you give like a crazy experience to a certain segment, and India being a large market, there are various segments which are massive, and there's a category to be created. So similarly, I'm fairly confident anybody who's used global card will find it very difficult to use a forex card, next time. Similarly, I'm sure all of us have used Anurag's, one card, and I've been using credit card. All of us have been using credit card for 20 years now, and I can tell you there's no credit card which got an experience like one card. And people will take time. Some time to catch up. But as of now, I don't see any bank catching up with the experience which Anurag can provide. So there are these niches which are there, which will be available. Huge market, enough place to innovate and build something really unique. Anurag, over to you.
Anurag, you've got your answer from Vinay.
I guess it got articulated very well. No, I think we are all, we're all bankers. So we have been how banks operate, and banks are like very large companies, and they are serving right from a senior citizen and let's say a kiddie account or a defense account, and multiple products and things like that. And we are in an enviable situation that we have a very large market waiting. So we don't need to actually, in fact, most of our partnership discussion isn't about eating somebody else's share. It's about how do we penetrate more. That's how most of the bank partnership we work, and I'm sure all of us work. The argument is only about how can we penetrate better. And I guess I would just like to probably add a color to it. So in bank, a lot of us banks are doing good job in transferring transactions from physical world to digital. But still, you will hear this word a lot about channel migration. How are you transiting transaction? While people like us, Neo, Jupiter, for us, mobile is the only proposition. We start from there. For us, this is not a channel migration activity. We're not transferring transaction from branch to here. We are originating, managing, an end-to-end life experience is built. So we take mobile as the first and build the entire backend behind it, right, from onboarding and all that. So I think that's where I would say, so, bring in, the good news is that Indian consumer is now used to do a massively digital experience, thanks to folks like Uber, Amazon, Flipkart, Baidu, everything is available digital. We are just riding that wave. Why can't we have the similar experience there? So I think that's where I would end. I don't think it's a debate about who wins. There's a very large market out there.
So digitally native, unique experiences targeted at specific segments is what I hear. Going to Mal.
Yeah, sorry. No, I would just want to add, look at most of the bank websites or let's say apps. They're defined in very clear-cut product segments. They're very coming out from, you go to branch, you have counters. That's how in internet banking you have, services being offered. Because they have to cater to the large segment of customers who are there probably already digitally aligned, probably who are yet to pass the journey. For people like us, we want our customers expect, if I click here, can you recommend what should I do next? I don't want to go through these. I don't want to detect myself. You guys are supposed to do things yourself. So these are, I would say, just what yeah.
Yeah, and highly personalized recommendation experience, like you and Jiten said. Malcolm, I'm switching gears, coming to you. You're privy to how the banks are looking at the fintech and banking space. Are you seeing banks much more willing to partner with fintechs, and what's the conversation in the boardroom? Is it a partnership of equals, or is it like an experiment right now?
Yeah, no, thank you, Vikram, for the question. And I think the background to this, I mean, the prior question set this up very well. And thank you for having me on. So I think, Vikram, I think maybe three, four sets of thoughts, right? I think one, and maybe we kind of fast forward to 12, 18 months back. I think for everybody, this is a little bit of a new animal, right? People are, I think 12, 18 months back, people weren't sure what this touches, feels like, or looks like. But I think thanks to, I mean, some of what we heard from Vinay and Rajatan, I think people have begun to understand what this means, right? I think there was also, I think 12, 18 months back, a question of what is this, right? Is this a new product? Is it just a distribution? Am I going to get more customers? I think a lot of that is getting clear now. So that's one. I think there's a clearer understanding of where an entity like a neobank fits in, right? I think two, Vikram, to your question of where the conversations are. I think again, a couple of thoughts, right? I think clearly there is, and some of it links to what you spoke about earlier, right? In the sense that post COVID and people very quickly realizing that the world is changing. Traditionally, obviously they are adapting themselves. Samir spoke a lot about it, right? And experimenting. I think there are two kinds of shifts. One is there is a clear mindset shift to say, listen, uh, why wouldn't I think about being in as many places I could be, right? And that's kind of driving. Therefore, let me actually expose my capabilities to as many people as possible, right? And that's kind of one set of big mindset shifts. I can't rely on the world as I knew it in terms of branches and sales forces and all of that. Why don't I actually be where as many places I can be? And accompanying that, I think, is a real, what I would call, operating model shift. I think Vinay and Rag, everybody alluded to the fact that as you work with banks, there are historically been challenges around integrations and the time it takes and getting past compliance. I see a clear shift in that, right? I think few of the banks I know quite intimately are almost getting the point of saying, listen, can we kind of almost pre-create a set of APIs as a bouquet that I can offer to somebody who comes along, and I think the kind of conversation on those topics has evolved substantially, right? To the extent of saying there are people inside the technology organizations of banks today who are looking at, hey, is the developer documentation clear, right? The developer is reading it on the other side. So I think banks are taking this really, really seriously as an opportunity to really broaden, right, in the new context. And then lastly, Vikram, maybe to round off your question, I'll add what role from a bank's perspective I see it, and it echoes a lot of what Jiten and Rag Vinay said. I think one, clearly there is a point about access, right? Are there sizable but meaningful niches that Vinay was talking about, right? It could be foreign travelers, it could be small traders looking to think about forex, it could be small SMEs, it could be first time savers who really don't understand the mechanics, etc. So I think there are sizable niche pockets. So there's a piece around access that the banks think they could get. I think the second thing is, this notion of stitching together experiences. I think we talked about financial services experiences, but I think a lot of these segments potentially need multiple experiences stitched together. Some of it could be financial services experiences, but you could stitch non-financial services experiences, right? So if you look at small SMEs, can you stitch together, other things like payroll or marketing credits from AWS and things like that, right? So therefore, from a bank's vantage point, they can provide some part of this, but someone else coming in and stitching a broader experience. And I think the third part of this, again, spoken about was on the product side, right? I think innovating on the product, making it much more tailored, simplified to a very specific need. I think what was alluded to was a bank is a little bit of a supermarket, everything for everyone, right? And therefore a much sharper proposition. So I think to sum it off, Vikram, from a bank's point of view, most institutions I'm aware of are looking at this as a great opportunity, are kind of almost reconfiguring their thinking and operating models to partner more and more. And I think that's at least the sentiment I'm seeing.
Samir, Samir, are you there?
Sorry, is there a...
Sorry, I was going to get you to add. Do you agree with sort of that overall sentiment that banks are just partnering with more fintechs and neobanks, and what's been driving your mindset? Because I know you've been a big proponent of these partnerships.
Yeah, so look, so let me start from what is our thought process here and why we are optimistic about this, and as well how we are thinking about these partnerships. So, couple of things. One fundamental belief we have is that as we move into the digital world, customer journeys will converge. And so, as an example, if say, see the kind of one of the key things I keep saying is nobody wakes up in the morning and says, I want to take a personal loan today. Right? People wake up in the morning and say, I want to book a vacation or I want to buy a mobile phone. And the act of taking the personal loan is a necessary step towards meeting that objective of, booking the flight ticket or buying the phone or whatever else. In the physical world, these two are separate journeys, separate activities. To buy a mobile phone, you would go to some shop somewhere, and to get the loan, you would go to a bank branch or to an NBFC branch or whatever else. In the digital world, these can converge. And that's where the beauty comes in, right? The partnership beauty is not when, the financial services adds on to the customer journey, but that when the two integrate so deeply that it is one seamless journey, and then the customer doesn't even figure out that there were two institutions and so on and so forth. So one strong belief we have is that the world is moving in that direction and will continue to move in that direction. And as a result, we need to partner with lots of folks so that we are there when that journey is happening, because we are never going to be a mobile phone sales company or a travel company and so on and so forth. So that's kind of one part of how we are thinking about it. Second, I go back to kind of Jiten's point. If you think of Indian banking, Axis is India's third largest private sector bank. We have a balance sheet of more than 8 lakh crores and so on and so forth. But our market share in Indian banking is 5%. In fact, 5% is optimistic. It's less than 5%. So there is 95% out there who don't bank with Axis. And India is a market, if you kind of go back 20 years, financial services has been growing at 16-17%. Last few years has been bad, but otherwise we are a market that's growing at 16%. So if you're in a market that is growing at 16%, our market share is 5%. There is just so much opportunity for out there for us to capture, and partnerships are a way for us to get to that. Third, in terms of how we think about partners and so on and so forth, see, neo-banking is a very loose term, right? And it's a very vague term. As an example, the three neo-bankers here are running three completely different business models, right? In fact, they may not even do what the other is doing for the foreseeable future. And these are only three. If you got like 7 other folks, they would be doing other stuff. So this partnership and neo-banking is a very broad word. Our view is that there are different types of partnerships. There are partnerships where which are very, very deeply integrated and which are on the liability side or the transaction side of the business. And there we are very selective. We are open to partnerships, but maybe we'll do a few handful. We can count in one on the fingers of one hand type of approach, because that's where regulatorily it becomes very, very sensitive, very tough. From a customer perspective, it becomes extremely sensitive. Right? Finally, the customer's money is with me and not with the new bank, and so I have to be very thoughtful about who I'm partnering with. So we are very bullish and very optimistic, but we are extremely thoughtful about who we partner with. And then there are other types of partnerships which are maybe in the area of, let's say, loans or cards or other transactional products, and there we are very much looking to partner with as many folks as we can. So we have a kind of a view on which type of folks we want to partner with based on the type of business model itself, and that's quite differentiated.
Thank you. I'm going to shift gears a bit and go to some of the challenges that are listed on this page. And one of the things that Malcolm said was, you want integrated experiences. I heard the same thing from Samir, that you need deeply contextual products and so on. And you have all of these high CACs in fintech. So there's obviously a need for a very differentiated GTM. And one of the things I keep hearing is that you almost need a Trojan horse as a prerequisite for a neobank. Anurag, in your case, you had the One Score app, which actually led to one card. When you had the entire your payroll customer base, which actually led to one product, which is now led to your future product. Is that a prerequisite that you will have this differentiated GTM, but you will actually go do something else, and then you'll actually go and build the bank on top?
Like, if I don't think it's a prerequisite, because I think giving, as we said earlier, there's a large market and people are looking for digital experiences. But however, having an adjacent use case just adds to it, because, consumer usually buy things in a flow-based approach, or you can call it a ladder-based approach from a credit product, what we followed. So our thesis was very simple. There are 100 million of them, 100 million Indians who are eligible for a credit card. Only 30 million of them have a credit card, and for them, they're already there in the bureau. And for a credit card, it's a very long-term relationship product with the customer. So it was our job to make sure that consumer understand credit before we give them credit. And that's why we took One Score, which was a credit score app. And but let's say if I would have launched something else which probably had a much bigger demand but had nothing to do with credit card, I would not have got it converted to one card. So I would say having an adjacent use case probably makes sense, because your proposition becomes slightly more wholesome. But I don't think it's a very strict prerequisite. I don't know. Same for, I guess, Vinay, you can add to it.
Yeah, Anurag. So, having an adjacent use case, or a Trojan horse for that matter, helps in way of reducing CAC maybe to a little, but eventually the product has to be good enough, and then the real business is generated from referrals and word of mouth. So if you look at in our travel product, the travel was what we spoke about, but actually it was at the back, it was nothing but a debit card or a credit card. But the Trojan horse in that case was travel. But for the product to work, the product has to be powerful. And that's why I keep coming to the thing that, although like Anurag has got a credit card and I got a travel card, but they are the best which is available in the market in terms of user experience and user value. So that is eventually really, really critical if you want to build a retail banking business in India.
Jitin, coming to you, you've invested in lots of fintechs and neobanks who all have the Trojan horse GTM, but you have chosen not to do it. So how did you make this choice, and why is it important or not important?
So the way I see I think the Trojan horse, it's still the value prop you pick up basically for the customer. And I think if you sort of choose a segment and build the proposition very, very targeted towards the segment, I think that itself is a very strong hook, in my view, which you can pick up and just keep on harping that and do so well in that segment that automatically becomes a word of mouth Trojan horse to have the additional sort of set of consumers coming in. So I think that is a very simplistic approach, at least which we are adopting, rather than saying that it is a mandatory to have something to start, and then only you can build your core business.
Sorry, I think there was some background noise there. I think I'm also going to look at the Q&A questions, and just a quick request to the audience, keep dropping questions in the Q&A. We'll try to answer some of them live. Some of the more tactical questions we'll try and answer in the chat itself. I think the one theme that everyone has picked up is, how do neobanks make money? Right? We know that banks make a lot of money, but it's not clear that how neobanks make money. And as a VC who's invested in a few neobanks, I'm also still wondering how neobanks make money. And so I know that all three of you have very different business models, and I'll come to Samir and Malcolm last, because I think there can be very, very different business models as well as revenue models. But there are two questions in that, how neobanks make money. One is, as a neobank, do you not expect to make money in the short term, and is that what you should be ready for? And second, long term, is it one revenue model that you will bet on versus having like multiple revenue streams from the same consumer? And any of you guys can go first.
Yeah, probably I'll go
So,
first. Yeah, okay, Jiten.
okay, Anurag, go
Yeah.
ahead.
So
No, go ahead, Anurag.
I think, as Vikram, you rightly said, banking is a pretty simple business. It's a fee business coming from services, stroke third-party products, and NII. And two things we need to make sure that it's a very long-term business. I think this is one has to start with a very long-term approach, and primarily if you are partnering with banks, because banks also love that kind of long-term approach in the with the partners, because ultimately the customers needs to have the comfort that okay, the entities are going to be around when I'm actually dealing with them for a long term. This is how the business nature of the beast is. That's one. Second thing is, if to give you a straight answer, so these are the two big revenue lines, and we got to share with the bank, depending on your model. If you're a lending heavy model, you got to get a share in NI, otherwise mostly fees. But I think, like you rightly said, if one has to look for multiple sources of revenues from the customers, you can't build business only on single source of revenue, especially till you are fully probably regulated and you have your own license and things like that. In a bank-led model, it is expected to, we thrive on user experience and engagement, so that we create multiple source of revenues, so that consumers stay with you for long. But I would just end with that, the model is yet to evolve, and one has to come up with a very long-term approach here. And I'm very happy that most of the VC, including you, are alluding to this fact, so that we could have the comfort of building it, for long. so that's really important, because we need patient capital here to build the business, because this is a very long-term play. Over to you, Jiten.
Yeah, so the Vikram, the way I see it, that and the business model has to be clear from day one, be it neobank or any other business for that matter. And because if you don't have a business model clear in terms of how you're going to make revenues from your business, I think it ends up becoming very, very challenging to discover revenue lines later. This is not a social network that you make a big network and then you will run ads and then you will make money. I mean, in this business, maybe running ads may be very, very suboptimal idea, or maybe prohibitive as well. So I think like if I look at globally, the way people have made money, I feel some of those ideas will come to India as well from a revenue making perspective. So globally, people are making money from an interchange, from a subscription which they charge to the customers, and now they have started introducing the lending products or the investment products for that matter. I think in India also, while the lending, investments or insurance, all banks have been doing that, and that's a standard income model which any bank follows. The neobanks will also to follow the similar thing. The only difference which I see is will consumers ready to pay some sort of subscription for such kind of service, because the additional services or the experience which you're providing, is that a viable idea or not? Globally, it hasn't proven. In India, it has to be seen. So I think otherwise your income streams will be more or less similar what a bank is used to making income from the consumer. That's the way I see it.
I would like just to, in addition to what Jiten and Anurag have mentioned, I just like to add that in India, we are, fairly lucky to be in a situation where there is a significant liabilities NIM, which is there on the table in case of a savings account. What it does is that in a partnership, you got a fintech and you got a bank. So at least bank's interests are taken care of. The first off the bat, the moment CASA comes into the bank and the liability name kicks in, bank are more or less, their business model is sorted. You don't need to worry about it. So which is very good in a way that, the other revenue, which is available in a traditional bank, which is like a fee-based revenue, you've got liabilities, lending-based revenue and wealth management-based revenue. The core three, and of course, interchange is part of the transaction-based revenue. So those four, after you take out the liabilities NIM, which is a significant revenue for the partner bank, you've got actually four more streams available to be distributed between a fintech partner and a bank, which makes it a very very viable business model, giving the actuarial life of typical savings accounts, salary accounts in India, 3.5 5 years of actuarial life, and the CACs, which are what it is today because of huge demand available in the market. If you take CAC to LTV, I mean, it will be really difficult to find a business model that will not work. To make it not work really. Otherwise, it will work.
Excellent. Sameer, there's been this talk of a partnership and, working together and so on. But who owns the consumer at the end? Does the bank own the consumer? Neobank owns the consumer? Partner owns the consumer? Who owns it?
Yeah, I think we would all like to believe that we own the consumer. But as I keep saying, no, the consumer owns the consumer. Yeah, nobody owns the consumer. There are, I think more tactically, I think on a more serious note, there are some, like with our partners, we have some very clear discussions around is there a yes, then for what period and so on and so forth.
Well, I think that would be clear, but say more about the consumer owns the consumer.
The consumer is free to do whatever she wants to do, right? Like, without taking names, but if you were to go and buy a mobile phone or book a cab, most people will go on both apps or whatever, 3 apps or 4 apps, and compare and kind of see what is the best offer they are getting in. And the same thing is true about financial services. While there is a quote unquote loyalty with banks, if we kind of go around the table, all of us will have at least 3 bank accounts. And if you see where we've taken the home loan from, it may be from a 4th bank, and a credit card will be from. Right? So consumers are smart. Yeah, they are not very smart. Whoever has the best offer on the table, who can kind of with them, will kind of get the consumer share of wallet. Just going back to the points, like I want to cover one thing on the economics, right? See, there is a misnomer that financial services is very economically attractive, particularly in the liability side of business. In fact, retail banking it takes a very long time for it to even break even, forget making profits. The good news about retail banking is that once you start making profits, it is annuity returns, right? So, if somebody has savings accounts and he has 10,000 rupees in that savings account, typically he will continue to have that, unless, you kind of really do something wrong. But for you to make money, just to kind of put some of this into numbers, right? Like the typical savings account margin is, let's say 3%, optimistically 3%. If a customer has 10,000 rupees with you, you're making 300 rupees from that customer annually. That's the income on savings account names. If the customer walks into an ATM and he uses your debit card to withdraw money, you pay 50. The cost of that is 15 rupees, 15 to 20 rupees. And so if the guy does that once a month for 12 months, you are dead. Your kind of entire revenue is gone. So it is not, it's tough to make money in retail banking. The retail banking model only works when the guy is with you for 7 years, has taken 3 products, his balance has deepened, and so on and so forth. And that's what, which is where this entire economics of this will come.
And I've heard you say this consumer owns the consumer statement before, and at least the way I internalize it is that you're moving to a era of sort of completely free choice of choosing consumer financial products, which also exists today. But the number of transactions that a user does digitally during a day has just exploded. And the consumer is actually choosing different financial products on each of those transactions. And therefore, whoever captures that, 50% of my transactions in a day will actually end up making the most money, because on each transaction you make little money. But if you capture 50% of the user's digital journey through the day, then you'll make the most money off that particular user. At least that's the way I sort of internalized your comment. Last one, and everyone's sort of like a proponent of digital banking on this panel. But Malcolm, coming to you, and hopefully you have some influence in the regulatory landscape. If you had to chart out, given what you know about the global landscape, and say, okay, this is the digital banking license for India. What would that be, and how fast would you do it, knowing that you also have to take care of systemic risk?
Yeah. No, so I think, Vikram, it's a little bit of a crystal ball gazing kind of question, right? And I think
thought that's what you get paid for.
Let's try. No, so and Samir, maybe you should also chime in here. I think that, and again, the regulator has been open to these kinds of interventions in the past, right? There's also cues from surrounding markets, similar markets, surrounding markets about new categories of licenses. So to me, I think it's a matter of time if I were to kind of hypothesize on when a new category of fully virtual or fully digital kind of players get in. I think the regulator will want to look for the right kind of checks and balances in the system. I think that's been the general stance, right? And I think we spoke about some of this, the investments required in fraud, KYC, compliance. So I think it'll probably be two things. One, the existing set of players will have to get to a certain level of scale, establish a track record, build trust. And I think at that point will probably be when regulators would get comfortable to roll some of these out with, of course, the right checks and balances in the system. And that's, I think, a little bit of the trajectory seen in other markets as well. Right. You look at the evolution in Europe, or the evolution in LATAM. It's been a little bit of that, right? A few players have gained scale, established themselves, built trust. The regulator has then kind of given kind of limited licenses, and then eventually full-scale licenses.
So Jiten, Anurag, and Vinay, if you had to say, I mean, there is obviously a long road towards full regulatory clarity for neobanks and so on. And both the ecosystem and infrastructure builders have been very progressive, right? Starting with UPI and the number of different infrastructure APIs that are getting created almost on a weekly basis now. But if you had to say, this is the immediate next step that you would want on that path to regulatory clarity, what would that be?
Wow. I think if I were to take a stab at it, so I would not jump into the licenses part so soon. I would rather say if and by that, this is a hypothetical question, so just keep it that way, my answers. So I would say if regulators were explicitly telling banks that, hey guys, you should try this out, these kind of models, but do the checks and balances the way you're supposed to do, I think there will be less confusion in banks' internal stakeholders that such things can be done, and in what gamut it can be done. I think that is what, as a first step, I would see, and then worry about the licenses, digital banking license, and all of that as a second step. I think there is a long road to reach there. While for every fintech, this is the aspiration that I want to become a bank, but I think they still need to learn, in my view, what it takes to become a bank.
Fair enough.
Yeah, I would just add to that, agree with what Jiten is saying. At this point in time, I think we are all focused on building solutions and building scale and building infrastructure to handle that scale, and in partnership with the bank. But one thing for sure that, the quality of teams which are attempting neo-banking, ideas, all three of us are ex-bankers. So, to that extent, we have, been exposed to some of these situations before, and we understand that. And, we say in banking that, when in doubt, refer the previous page. So once we have 3-4 such companies scale up, it's much easier for banks as well as other companies to, build and scale. So that's where we are, I guess.
Yeah, Vikram.
Vinay, anything to add?
Just a clarity. So if you look at the regulation today, there's a clarity around prepaid partnership. There is some amount of clarity around what fintechs can do around credit card partnerships, but there is little clarity on let's say debit card, savings account, current account partnerships. So starting there, and once you do that, it becomes very simple internally in the bank to understand what kind of regulations are going to come your way, or what kind of questions are going to come your way. So that will be a very good starting point, I would say, from where we can build it on.
Samir, you've been both in a bank, advising a bank, and looking at the fintech space. What would you say is sort of the best next step? And we're all sort of in uncharted territory, and we're sort of moving this space forward. But any final thoughts on what everyone should think about when they're saying, okay, this is the next step on regulation?
No, I'm with Jitin on this, which is I don't think the fintech ecosystem and fintechs are ready to be licensed today. That exercise itself is it'll take life out of them, and it'll kind of take the innovation and all the new things that.
Because you're saying the compliance and governance load is just too much.
Oh yeah, absolutely. Just applying for that license will take 6 months, right? So you forget about launching your bank and so on and so forth. So I don't think we are ready for licensing. What does to happen is, see, look, right now we are, all of us jointly are using approaches which are not fully kosher. I mean, maybe that's not, but we are using, as an example, we are using the BC way to kind of do this partnership, right? And BCs were intended for something completely different. They were not intended for this at all. And hence there has to be some kind of framework that needs to be defined. And Vinay referred to this, like we have it in PPI, we have it in many of these, some framework around saying what is okay, what is not okay, without necessarily having a licensing kind of a regime to say that this is okay and this is kind of not okay. And I think once that is there, that will help everybody. That will help the fintech, because then they know what they can do, they can't do. That will help the bank, because you know what are the lines versus not, and so on and so forth. And we can kind of progress in that fashion. Maybe at some future point in time, some fintechs become ready to apply for licenses, and then they can sort of come up with licenses and so on and so forth. But that framework today is important. Just I think for everybody's benefit, the regulator is completely aware of this. It's not like they are not. They are very much aware. They have a bunch of questions which are very nuanced and very thought through as well. So they are thinking about it. And we will see something happen here, not now, but maybe 12, 18 months down the line.
Guys, thank you so much for the time. Sorry, did I cut anyone off? Someone was saying something. Guys, thank you so much for the time. I'm just going to make a few quick closing comments. Overall, we've all been in uncharted waters, and I think we'll continue to be in uncharted waters as we figure out this entire digital banking, neo-banking type space. Full disclosure, we are investors in both Anurag and Jitin, and think very highly of what Vinay is building as well at Neo. I think the core of this is, can you own a sliver of consumers or customers and provide them digitally native experiences with like deeply contextual micro products? And I know you use a lot of buzzwords there, but I think that's sort of where we are, where we are trying to find a consumer, target them in a very specific way, and give them a few micro products which they can use consistently. The business model is also sort of evolving, but I would say almost everyone that you heard from the panel has a very clear revenue model that they're going after. You have to make a choice whether you are going to spread across different revenue streams versus one revenue stream. And I'm hearing from everyone that they're actually spreading across different revenue streams. Lastly, I will tell you that this business is not for the faint of heart. You're seeing multiple people here who have jumped in after spending decades in banks, and therefore they know how slow this is and are building it with their life's mission. I think it will take time, and it is a slow build. Finally, from a regulatory standpoint, my suggestion and advice to you would be, build your business and build your company such that you are prepared to be regulated at some point in time. And if you don't do that from the get-go, I think you will find it hard to scale at some point in time. The regulator has been very progressive, and we're all sort of moving forward in sort of like Samir said, in a iterative way. But at some point of time, some kind of regulation and compliance will come, and you have to be ready for it. So thanks so much for joining us. I think this is the last of our fireside chats. We're hoping to add all of this context to the report. And thank you to the McKinsey team for enabling all of this and putting all of this together.